We have Doug Cote, Chief Market Strategist with ING Investment Management, and Michael Norman, Chief Economist with John Thomas Financial. Doug, let me go to you. Jack Welch thinks that gasoline may be letting the air out of the recovery, and that seems to be damaging the stock market. Do you think Jack is right?
No, I don't think so. If you look at economic data has been beating expectations on corporate profits, on manufacturing, on the consumer. Look at the consumer. Unemployment is plummeting. If you follow weekly initial unemployment claims, that's a leading indicator. I think jobs are way more important than gasoline prices. Also, if you compare the meaning of oil to 1980 till today, it takes 2/3 less oil to produce $1 of GDP. That's not commonly understood.
You know, Mike Norman, that's an interesting point. Oil is less significant today to the consumer than used to be the case because of efficiencies. Jobs are rising, as Doug Cote said. But is it possible that we're all getting bamboozled, that maybe if crude oil, which fell today, is flattening out, maybe even coming down a little bit, we're all too pessimistic about rising gasoline prices? Is this a fake out? Might gas prices be leveling off, if not declining a wee bit?
Yeah, I think they are leveling off, and probably looking out probably will decline. And actually, if you look at the data, retail sales, even ex-gasoline, when you take out the gasoline, pretty decent, okay? Look, we've had some moderation in, the first couple of months of the year, but the economy is still growing. I have to agree with Jamie Dimon. I mean, we see improving signs. Jobs, very important, right? We're seeing some improvement there as well. So I think we're going to still have an economy that's growing, not very strongly, but in the 2% growth range. That's, going to be good for the stock market, which I think will equate to more confidence, and we'll see that play out.
All right, so you're the optimist. Actually, I guess you're both fairly optimistic. Doug Cote, I spoke this morning at an Oracle conference, a lot of CFOs, and they were kind of giving me a reading, not all of them, but a couple of them, that it's a menza type economy. It really isn't that strong. And I guess what Jack Welch is saying is maybe the best news is behind us. I'll give you another pass on this. Are you a stock market bull as well as an economic bull?
Well, I'm a stock market bull. If you look at it, this 2011 was the highest corporate profits level ever for the S&P 500. This fourth quarter, look at it, is the best fourth quarter in history, and consensus was around 8%. It came in around 12.7%. That's a 50% increase or miss by Wall Street expectations.
But Doug,
that's the 10th consecutive quarter of misses by Wall Street.
No one's more bullish on profits than I have been. But people are worried about the future. A lot of people are saying, profits are going to slow down, maybe low single digits. The profit margins themselves are coming back down, reverting to the mean, heaven forbid, and that therefore stocks have built in too much optimism.
Well, you have to look at the catalysts for growth, which are many. I would look at global trade. We're seeing emerging market to emerging market. U.S. corporations are getting the biggest benefit from that emerging market trade. You look at what's going on in energy. You've been talking a lot about energy and domestic oil production. The shale fracking revolution, we think, is going to create a lot more jobs. And as a matter of fact, we don't think politics is going to stop it. If you see that the Keystone deal from Oklahoma to the Gulf of Mexico is getting done. 3 other companies said they're starting pipelines. That's domestic. That's here. There was an article in the Wall Street Journal today to talk about steel prices. Steel's being used. We're very bullish because the catalysts going forward are many.
Mike Norman, give you the last word quickly. Favorite investment here?
Oh, I like energy sector, and I like technology.
Even though you think prices are flattening out and might come down, you still buy energy?
Yeah, it's still a very, very strong sector. I definitely still buy energy.
And one of the things Jack Welch mentioned, again quickly, is you have a lot of tax uncertainty the very beginning of next year. You have massive tax hikes on the books. That assumes they don't do anything in Congress about that. Does that at some point weigh down the stock market?
It could, absolutely. But look, right now, Larry, we're in a sweet spot. We have low inflation, low labor costs, low interest rates. That translates into a good environment for stocks.
So energy, #1 investment.
And I like technology, Microsoft.
#2. All right, very good. Thank you, gentlemen. Appreciate it. Doug Cote and Michael Norman, very good. As we said before, anxiety over Europe.